Let's bring in the Chairman and Chief Executive Officer at Mattel. Ynon Kreiz is joining us this afternoon. Ynon, thanks so much for being here on the TD Ameritrade Network.
Good to be here.
There's a lot going on in your company right now, Ynon. There's a quarantine period where people got to find ways to stay entertained. There's a future as you guys are looking to develop new types of avenues for your brands. What are you most excited about right now?
Well, let me start by saying that this was a very strong quarter for the company with our best performance in years. We're seeing high demand by consumers and another milestone year for the company. For the second consecutive quarter, we achieved double-digit sales increase. We grew ahead of the industry and gained market share globally. Our results exceeded expectations on many levels, with the highest fourth quarter growth in 15 years. And we saw a very large increase in profitability with our full-year operating income that was more than 2.5 times higher than last year. But this is not just about the quarter or the year. It's about a multi-year strategy that is progressing very well, which puts us in a very good position to continue to increase profitability and accelerate our growth in 2021 and beyond.
You went even beyond what the street was looking for in terms of your earnings, and the climb in terms of the bottom line is very unique among your group. According to data compiled by Bloomberg, you were in the 90th percentile of bottom line growth. The top line a little bit slower compared to peers, but it seems right now, Ynon, what you're describing is a priority about profitability because you've also got debt that you want to keep paying down. Am I right?
That's right. So on profitability, we made significant progress over the last 3 years. We increased our EBITDA by almost $600 million. We grew our gross margin by more than 1,100 basis points and had 10 consecutive quarters of improving our gross margin. And also our cash flow improved by almost $500 million, $488 million to be exact, over the last 3 years. So very meaningful progress on profitability, cash, and improving overall our financial standing. We reduced our leverage ratio from 25 in 2017 to 4 in 2020. So very good progress across the board. And now we're looking to accelerate our top line growth. We just guided to a mid-single-digit growth for the full year in 2021, and also provided goals for 22 and 23 to maintain that level of growth. So we are looking to accelerate our growth momentum after 2 years of consecutive increase.
You mentioned the changes to the leverage ratio, something that investors and ratings agencies alike both like to see. S&P has put you on ratings watch. It seems like that would probably be for an upgrade. I'm curious if you have any details on that. And on, do you expect ratings upgrades and credit improvement coming?
Well, we have seen consistent, steady improvement in our cash flow over the last 3 years. Going forward, we will be focused on converting an even increased percentage of EBITDA into free cash flow. And as previously stated, we intend to utilize excess free cash flow to reduce our debt in the near term. Given our expectation for a higher EBITDA, utilizing our cash to reduce debt, we expect that our leverage ratio will continue to improve as we work our way towards an investment-grade rating.
What comes as you pay down that debt, Ynon? Does it free you to be more nimble if you want to take on further new debt later on? Does it free you to give money to shareholders via dividend hikes or buybacks? What's the plan once you move through this, what I see, correct me if I'm wrong, but the latest about $3 billion, a little under that in terms of total debt of all forms. Once you get through that and pay it and have that ratio, those leverage ratios improved, then what do you want to do with that money? Should we expect dividends on the horizon?
Well, more than anything, it gives us optionality. We're going to do the right thing by the shareholders and the right thing by the company. Our goal is to transform Mattel into an IP-driven, high-performing toy company. We are well on our way to achieve that with a strategy that is progressing very well. And so as part of that, managing the company's balance sheet is part of that approach, and we're going to do the right thing to optimize shareholder return.
In terms of that high-powered growth, where do you see that coming from? I know that there's been talk about new forms of brand utilization via movies, the Barbie movie. I think that's still happening. I don't know, with theaters closed, what's the plan for that, Ynon? I know that was a big deal for investors when they heard you guys were going down the movie route. Can you give us an update with the theater problems right now?
Sure. Well, let's start by saying we have a tremendous opportunity to grow within the toy side of the company.
Okay.
We're seeing continued momentum with our power brands, especially Barbie and Hot Wheels. We are bringing back catalog IP that have existing fan base, such as Masters of the Universe. We are looking to form new partnerships with major entertainment companies. There's new innovation that is coming out of Mattel. We're also very focused on e-commerce, online retail, and our own direct-to-consumer business. And as you said, in the mid to long term, we have a very exciting opportunity to extend our intellectual property into highly accretive business verticals that are directly adjacent to the toy industry. We own one of the strongest catalogs in the world for film, for family and children's entertainment. And that gives us a very exciting opportunity to commercialize our brands in other ways. We did announce 11 motion picture projects to date, all with major talent, very strong partnership with the major studios, some of the most prolific filmmakers of our time, of our generation. The Barbie project is one of them. It's shaping up really well. These things do take time, and they are part of our mid to long-term strategy, but they are well on their way. We are in the process of putting budgets together. Scripts are advancing. We're in casting mode, depending on the project, depending on the level of progress. But I can tell you that it's going to be worth waiting for. These are exciting projects, and they will be worth the wait.
It doesn't sound like this year we should be expecting the first Mattel movies, Ynon.
No, that was not the plan. That was not the plan. But with that said, we are making a lot of progress on Mattel Television. This is another way for us to commercialize our brands. At this point, we have 17 shows, series, and specials in production, 25 more projects in development. We recently announced the Uno game show and the Whack-A-Mole game show. We announced distribution for Thomas and Friends series with Netflix and Cartoon Network in the US, and more distribution will come in internationally. So a lot of movement there as well, in addition to our film strategy. Film take longer, that's the nature of that business, but in the meantime, we're making a lot of progress on the content strategy.
And on one last thing on the e-commerce side, what % of your sales do you hope at the end of this year come from online?
Well, we've just announced very strong performance in our e-commerce and and online retail in 2020. The fourth quarter grew by 40%, and the full year we actually grew 50%. And at this point, it represents a third of our global retail sales. We ended up being the #1 manufacturer in e-commerce in the U.S. in the fourth quarter, and we grew our e-commerce share in the U.S. and in the fourth quarter, in the fourth quarter and for the full year. So this remains a key part of our strategy. For American Girl, it is already the majority of the business. The direct-to-consumer is the majority of the business. We ended the year with more than 2/3 of American Girl business in direct-to-consumer. So it's a big opportunity for us, another growth driver for the company. And it's exciting to see the progress we're making there as well, leveraging the quality of our brands and the built-in interest and fan base that we have around our products.